All right, Ken Orange Theory Trader back with you with another video on how to trade candles 3 and 4 on the 8-hour chart. So let's get into it. Now, the key to trading the 8-hour chart is very simple. So obviously you have candle 1, which sets the range. Okay, that's any candle can be a candle 1. The thing that I look for starts with candle 2. My preference is that candle 2 creates the high or low of the day or of the prior day, right? And then candle 3, what that does is simply going to continue the momentum from candle 2. It can delay by 8 hours, so you want to look for inside candle or a doji as a clue. And as a minimum, when you're looking for candle 4, candle 3 needs to close above or below candle 2. Okay, I like for it to close above or below both candles, but I'll show you that to illustrate that you may have a lot of more momentum in the trade than you may originally think. And then, of course, candle 4, it does continue candle 3's momentum, but it can delay by 8 hours or one candle. So you want to look for inside candles or a doji as a clue. So when you approach the chart, this is the mentality that you have to have. I'm only going to trade 8-hour candle 3s or 8-hour candle 4s. I'm going to monitor price around the key levels to look for entries. My bias is valid as long as the low or high of candle 2 holds. Okay. If the lower high of candle 2 is broken and the structure is broken, I'm just going to look for another trading opportunity. So you might be wondering, what are the key price levels? Well, they are as follows. You want to know what the 50% range of candle 1 is when you're trading candle 3, 50% of candle 2 if you're trading candle 4, or also 50% of candle 3 when you're trading candle 4. I'm going to illustrate this for you, though, so just hold tight and I'll show you how this may work. But it all depends on how you want to frame the range. Okay, just use a fib tool to gauge a retrace. And you only need 3 lines on the fib tool, obviously the 1, the 100, and the 50. I don't talk about 618s and all that other stuff. It's just not necessary, okay? Now, the opportunities, because you're dealing with an 8-hour chart, you have 3 main trading opportunities. Now, these aren't the entry times. These are just when the candles open, and these are all Eastern Standard Time. So obviously I have 1700 hours, which is 5 p.m. Eastern Standard Time, which encapsulates the Asian session and some of, just the Asian session. You have 1 a.m., which captures the tail end of Asia through London. And then you have the 9 a.m. 8-hour candle, which captures the tail end of London through the rest of New York. Okay, so those are the 3 candle openings. So any one of those times can present to you a candle 1, a candle 2, or a candle 3. So let's get into it. Here are some long examples. So we have originally this red candle right here, which creates candle 1 at 9 a.m. Candle 2 does create at 1700, okay, which makes the low of the day, as we see there with our marked levels indicator. And then notice how it's at 50% of candle 1, because this is candle 1. So this is what I talk about when I say draw a fib from the top of candle 1 to the bottom. And then you want to look for entries around 50% or below, okay, to try to get that candle 3. Candle 4, sometimes they're huge, sometimes they don't give much of in the way of continuation, but there was a valid candle 4 that gave you a little more action to the upside. And also notice how candle 3 closed above candle 1 and candle 2. So when candle 3 does that, it's not guaranteed that it's going to keep going. It's just that I like the odds. But obviously the best trade in this scenario was candle 3. Okay, so it's obviously because it was the biggest out of the long ones. Okay, so you have 2 opportunities here. So let's take a look at a different example though. So we have candle 1, which was at 1700 hours, candle 2, which created the low of the day at 1 a.m. and it rocketed out, right? Just because you see a large candle 2 doesn't mean you missed the move. It just means that you may have to be a little more careful with your entries, because the thing is, when candle 2 closes all the way up here, we don't know how far this price may retrace until it continues. Sometimes it's going to go straight up, sometimes it doesn't. So you don't have to trade these. If you prefer just looking for this pattern right here, it's easier to see. However, don't be intimidated if candle 2 does sweep the low of candle 1, closes above it, and then just keeps going. Because as you can see here, realistically, at least on this example, you could have entered as soon as candle 3 opened and just held this trade for, 16 hours, 8 plus 8, 16. Okay, this candle 3 and then this candle 4, because it just kept right on rocketing up. It would have been an overnight hold because candle 3 started at 9 and candle 4 started at 1700, and it just kept right on going all the way through Asian session. So sometimes you'll have that. Now, here's another example, and here's what I talked about with the inside day. So let's take a look at this. So we have candle 1 right here, which was at 1700 or 5 p.m. Eastern. Candle 2 created the low of the day. Candle 3 right here is below, okay, below the middle of candle 1, so we're good to enter there, all right, and then take the upside to that. Now, even though we're expecting candle 4, notice that this one right here did not give us a continuation to the upside. It was actually inside day. What do I mean by an inside, or not an inside day, but an inside candle? What do I mean by an inside candle? it doesn't sweep the high or the low of candle 3. That's an inside candle. So it just consolidates, right? So if this candle right here consolidates, that means that the trade is still good. You're still okay with a long bias, right? So what you can do is just wait for candle 4 to open and see if you can enter somewhere along these lines around the opening price of it, and see if there's possibly a fair value gap here as well in this prior candle, and just take it to the upside. Just go, right? So, and the continuation did happen. So the trading ranges for that one would have been 9 a.m. for this candle 3, and then this candle 4 worked out at 1 a.m., right? Right there, okay, for a London session. So that's how that shook out. Now here's a short example. So this tiny candle right here would have been the candle 1. Okay, sometimes candle runs can be tiny, right? Candle 2 did sweep the high and close below it. You had a small candle 3, and then you have another inside day right here. Notice how this candle right here did not sweep the higher low of candle 3. It just consolidated. But remember, sometimes when you see an inside day instead of a candle 4, the big move can be next, and that did happen here. This went into news as well, I believe. So this big spike was caused by a news announcement. So sometimes news will complete the pattern. You will see that. Now this was a more basic example here for a short. We have candles 1 and 2, which created the high of day right here for candle 2. Candle 3 was at 1 a.m. Notice how the 1 a.m. candle closed below candle 2, and then candle 4 just a clean finishing of the range right here to go to candle 1's bottom, right? This is the most stereotypical candle range theory you're going to see: candle 1, candle 2, and then candle 3, and then candle 4 right here. So that was that. And then another short example right here where we have candle 1, which is this red candle. Candle 2 at 1700 or 5 p.m. sweeps above candle 1's high, closes inside of it. I like seeing when this is an alternate candle, so when it ends green but still can't break the high of candle 1. I like that because to me, I read that as people checking out momentum. They're expecting more momentum to the upside, but the exact opposite happens. So candles 3 and 4, which happened at 1 and 9 a.m. respectively, just completely tanked and destroyed anybody who was going long here. So I like the way that shook out. This one here, I just wanted to include as a cautionary tale, because even though this is technically a daily chart, the price action is going to be the same, whereby you'll have what you think could be a valid candle range theory setup where you have a candle 1 and candle 2. But notice you were expecting a low or a red candle 3, but it didn't happen. Instead, it just consolidated and then consolidated again. You'll see this, okay? So don't think it's strange, but what you're looking for when you're short is this. You need to have a cutoff time, is my point. If this price action isn't trending nicely down in your favor, okay, in somewhat of a timely manner, that on an 8-hour chart, I say at least 4 hours, right? If it's like 5 hours, 6 hours into the candle and it's still not turning red, it still wants to chop around and be green, like say this right here, that could be a sign that you're going to be dealing with a consolidation candle and not a strong move. Remember, candle 3s, they create fair value gaps, and those fair value gaps typically hold. But if you just see a bunch of chop and moving around, then like I said, nothing's guaranteed. All right, candle 2's high held here, but you just didn't get any movement to the downside. It's going to happen, so I'm telling you that now. To a conclusion, it all starts with a high or low of the current day or prior day is. Okay, you have to know where candle 2 is, candle 1 and 2, and then you just take the reversal off of that. Be sure to frame your candle 1 with a fib, and then try to take those candle 3 entries below it if you're long, or above it if you're short. Candle 4 can sometimes be harder to trade because sometimes it can be a straight drop or rise. So always you want to be sure to trade with a stop loss. The best trading level is the middle of candle 1, like I talked about right here. This red line, right? That's the middle of candle 1. That's your bread and butter area right there. Or if you're long, this area right in there. Okay, see how this candle right here pinned it and then closed up here? Technically, you could have taken this entry down here and then look for this continuation up here, right? But the middle of candle 1, you'll see some of your best price action or best trading opportunities right there. Okay, so be sure to pay attention to that level. But like I said, candle 4, sometimes it could be a straight rise, like this one right here, just a straight drop, right? So there's no real way to predict that. I wish there was, but there just isn't. So you have to, treat that as an opportunity or possibility that can present itself. Never trade candle 2 because the big money's in candles 3 and 4. Candle 2, we really just expect for it to be a doji or consolidation. It's just the only thing we want to see candle 2 do is sweep the higher low of candle 1 and then close inside of it. That's really it. Can candle 2 do this right here? This candle 2 right here? Yes, it can. But would I try to trade this? No, I wouldn't. Okay, my trade is either here or here. I'm going to let this play out, right? Just trust me. This is candle 2 is not going to do this most of the time. It really isn't. I promise. I promise it's not. Most of the time, most of your candle 2s will look like this. All right, not like this. This is not the norm for a candle 2. It just isn't. I promise it's not. Okay, so just believe that. It will happen. Just like I said, it's just not the norm. Now, if you miss candle 3, the beautiful part is you can just look for candle 4. But I don't trade after candle 4 looking for more continuation. So if I see candle 4 do this, candle 3 do this, and candle 4 do this, I'm not looking for candle 5 to keep going and possibly like take out more lows down here. If you want to experiment with that, feel free. I don't. Okay, I'm not pressed to. I only get 2 opportunities per candle range theory, and then I'm looking for another one. I just reset it and go back to looking for a candle 3. That's it. After 4, I'm done. So, and remember as well, those inside candles can be a clue that a big move is coming, like this one right here, this green candle, straight consolidated. It didn't hit the high or low of candle 3, or this one right here. This is an inside day. So if it's an inside bar for candle 3, it doesn't do much. Look for another possible continuation and also monitor 50% of candle 1. Okay, that's your, like I said, that's your golden zone right there. So I appreciate your time and attention. Thank you so much for watching. I hope that helps you trade the 8-hour chart, and have a great rest of your day. Take care.